Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, September 16th, 2020, and I am pre-recording this Trading Places Live for Thursday, September 17th. Futures are currently mixed. They were up a little bit after the market closed, but they've pulled back some. It was Fed day. Fed actually, was pretty dovish. But the market, after rallying initially after the meeting concluded, did fall back into the close. And I'll be honest, I don't like the way the market's set up right now. I think in the short term, we may have a little bit more downside, but we'll get into that in just a bit. Today, what I want to do, first we'll go through the agenda. Going to get into the daily market recap. Then I've got in the news, just a couple of companies after hours. Wanted to go over. Talking technically, take a look a little bit at the S&P 500. I'll tell you a little bit about why I'm a little nervous about the S&P in the near term. Actually, there are a few reasons, and I'll go through those. Then we're going to get into false breakouts. There were a few industry groups that I want to talk about. Also, some stocks that had false breakouts, and they even show you some shooting stars, which are reversing candlesticks that I think we need to be aware of. Earnings spotlight, not a lot of earnings out there right now, but there will be one healthcare company reporting in the morning. We'll take a look at that chart. And then we'll wrap up the show today with 3 you must see, featuring mostly airlines. So stick around for that. All right, before we get into any of that, though, I do want to point everyone to earningsbeats.com, where you can subscribe to our free newsletter, Earnings Beats Digest. Simply type in your name, email address, hit that subscribe button, and we'll get you all set up. You can unsubscribe at any time. There's no credit card required, so very easy, and I think you'll find it educational. If you'd like to join us at Earnings Beats with our paid membership, you can click on this Join Today button. Find out what makes our portfolios tick. We got 2 of our 4 leading the S&P 500 again this quarter, although the aggressive portfolios had a rough quarter for sure. But the model portfolio has beaten the S&P 500 in 6 of the 7 quarters since its inception, and it is leading again this quarter. So 7 out of 8 would be kind of special. But anyhow, you click on that Join Today button. It'll take you over to the forum. You can take a look and see what you're getting. You got 30 days. It's a $7 trial, but we'll refund you the $7. So literally, it's a no-cost trial for 30 days. And at the end of the 30 days, you can decide if you want to keep it. And if you do, you can go monthly, or you can get a pretty nice discount by going with the annual rate. All right, what happened on Wednesday? Well, we had the Dow Jones Industrial finish up 37 points. The S&P was down 15, NASDAQ down 140. Things were looking a lot better than that in the afternoon, but we didn't finish very strong. And you can see mid caps did finish with a gain along with the small caps, but the NASDAQ was definitely hit hardest. Looking at the sectors, energy got a pop. So energy, after falling below this double bottom from back in, I guess that would have been May and July, we took that out, went back up. We're testing that 20-day from underneath. We're at 33.94, the 20 days at 34.67. We'll see whether or not we can get through that. That would be pretty big level to try to get back through. I think it would be really important, not only for energy, but for the market, for the XLE to climb back and close above that declining 20-day EMA. Financials also had a good day, up more than 1%. Industrials up slightly more than 1%, and trying to make this breakout here. Finished at 79.51, but intraday we were up above 80. I think we're going to run into some problems tomorrow, and I'll talk about that again in just a couple minutes. Technology, not really participating. I mean, you can see industrials trying to break out. Technology's down still quite a bit, more than 10% from its recent high. Communication services, not down 10%, but definitely down quite a bit since setting that high in early September. These were the only 2 sectors that actually lost more than 1%, and they were primarily responsible for the NASDAQ and its underperformance for Wednesday. Let's talk about the economic reports that are due out on Thursday. We have the August housing starts number due out. And the number that analysts are looking for is 1,486,000 units. July was 1,496,000. So we got maybe just a slight decrease. The expectation there is for a slight decrease. However, August building permits are expected to rise, looking for 1,530,000 units versus July's 1,495,000 units. And by the way, both these numbers, housing starts and building permits, housing starts right back to where we were pre-pandemic, and building permits actually above it now. So, we talk about a V-shaped bottom. If you're looking at the housing market, we certainly have gotten that. Initial jobless claims due out tomorrow, 850,000 is the number we're looking for. Last week was 884,000. So we're actually looking for it to decrease a little bit. And then September Philadelphia Fed manufacturing index will be out. And the expectation there is 15.5. And August was 17.2. So we're looking for maybe just a little bit of a pullback there. All right, in the news, I want to just talk about a few companies here, a couple after the bell that came out with secondary offerings. First Solar, down 3% after hours, so it is back down just a little bit below the $70 level. They came out and announced a secondary offering of 8.6 million shares, but it was just one selling shareholder. So the company is not going to receive any of the proceeds. It's just one shareholder that wanted out of a large position. Usually that's not received well, and after hours, we are down a few percent. I wouldn't be surprised maybe if we go back into the mid-60s, maybe test this gap support on this news. But at least in the near term, at least after hours, down just a little bit below $70. Next up is Chewy, CHWY. And Chewy commenced a public offering of approximately $275 million of its common stock. Stock was up a little bit here on Wednesday, as you can see, up about 3.8%. So kind of going against the market, but after hours, it was down 4%. So probably right back down to that 53 area, 53, 54. We'll see whether or not the recent lows hold. If not, I would be looking back down around $50. I still like Chewy, but there has been a lot of selling. You can see the volume's been pretty heavy, and the accumulation distribution's taken a pretty big hit to the downside as well. So, I think overall the chart's been pretty good, but this could be a little bit more than just a pause here on Chewy. We'll have to wait to see, but that secondary public offering is not going to help, that's for sure. And the last one I wanted to mention was Snowflake. This was an IPO that came out on Wednesday, and you can see just one day's action. Look at the huge the amount of volatility that we saw in trading today. Now, if I just pull up a 5-day, 10-minute chart, you can kind of see here was, and actually, let's just go ahead and pull up a 1-minute chart on a 1 day. So we started trading afternoon Eastern, and you can see the huge, huge move to the upside. Started trading, it looks like around 1238, maybe 1237. Opened at 245. Remember, this went public. I believe the price was 120. So it more than doubled at the open, and it got up as high as $319 by, maybe 15 minutes after it had started trading. And then literally from $320, it was back down to 232 or 231, which was the low of the day. That was within 30 minutes, 320 down to 231. So you're talking, or 319 down to 231. That's $88 from the high, which is, I don't know, probably about 28%, 28, 29% in 30 minutes to the downside. But from there, you can see we're right back up to about 275 in another 30 minutes. So like I said, the volatility was all over the place here, but the stock did finish weak. It did finish way off its earlier high. Who knows where this thing goes, to be honest. I don't usually trade IPOs. I need to, if you want to trade from a technical perspective, you need a history. That's what technical analysis is all about. It's about the study of price history to be able to help forecast what you think is going to happen in the future. Well, if you have no history to study and to analyze, it's really difficult. So I think it's more of a coin toss. I think it's going to be somewhat subject to what happens in the technology area. here in the short term. I still expect we might have one more trip to the downside. If we do, I wouldn't be surprised to see Snowflake maybe take a little bit more of a hit. But this is the largest software IPO in history. And even after falling way back from that earlier 319 level and closing at 253, we still had a $70 billion market cap for this company. And I saw an article where, even when you start to look at the comparability to how some of the other technology companies are valued on certain metrics, Snowflake is valued twice as high as Zoom, for instance, Zoom video. So you've got a lot of folks betting on future growth here in Snowflake, and that's what's going to trigger a lot of this volatility. There's just not going to be a consensus as to what this company truly is worth. Over time, we'll find out, but in the very near term, I would expect maybe we'll see some more volatility as a result of this. All right, how about talking technically? Let's get into talking technically. I said at the top of the show, I'm a little nervous about the market, and I think we could be going lower. And one thing I didn't like today, and first let's just look at the intraday. I'll get to a shorter term daily chart in just a minute. But if you look at this, this is when the Fed came out with its announcement, right at 2 o'clock. And you see how we made this move up, 34.28, almost 34.29. That's a pretty significant number, and I'll tell you why in just a minute. But we got up there, and then when we got there, we failed. And look at the selling into the close. From 34.28 down to a close at the low, or very close to the low, 33.85. That was about, I don't know, maybe 1.3% drop in the S&P 500 in the last hour and a half. Pretty significant. So I just am a little nervous. We took out the lows that we had seen previously on Tuesday. We finished at the bottom, on a very weak note. I wouldn't be surprised to see some continuing selling tomorrow, and maybe even for the next week or so. But anyhow, let's go back to that daily chart, because I wanted to show you something on the daily chart and why 34.28 to me was kind of meaningful. I'm going to pull up a 3-month chart so we can get a really good look at these candlesticks. And then I'm also going to annotate this because I want you to see the gap resistance right here. You see this gap? So had this big gap down, very heavy volume. This was after the, well, let's see, that would have been on Monday the 8th, I guess. Or no, Tuesday the 8th. I'm sorry, Monday the 8th was a holiday. So this was after the long holiday weekend. You can see the big gap down. Notice we came back on the 9th and the 10th, Tuesday or Wednesday and Thursday of last week. Went right up, didn't quite get the 34.26, which this is the gap resistance, 34.26. We got up, I think, to about 34.25, and that may have been on Wednesday, or excuse me, Thursday. I'm going to come back out of this for a second so I can get the actual numbers here. All right, so 34.24 and change was Wednesday's high, and 34.25.55 was Thursday's high. 34.25.55. Gap resistance was 34.26.96. So we almost got there, couldn't quite. Then on Tuesday, we got up to 34.19, and we couldn't make it. So again, getting close, couldn't do it. Today, Wednesday, after the Fed announcement, we shot up to 34.28.92. It looked like we had a shot of breaking back above and closing above that gap resistance. And then the bottom fell out in the last hour and a half. We lost 1.3% on the S&P, went back, closed at the low, failed to hold the 20-day moving average. That also is pretty important here. I mean, if you look back, we broke below the 20. We've been trying to get through, couldn't. Went back down, tested the 50, held that. Went back up, tried to get through the 20, 2 consecutive days, couldn't. Closed back on the low. I think we're going to go back down and test these recent lows. 50-day moving average right now is at 33.35. So that would simply be another 50 points, which is roughly about 1.5%. That wouldn't be hard to do. But the question I'm going to have now is, do we hold on to these recent lows? I believe we might have a little bit of an ABC kind of a correction where we go lower one more time. Market always is kind of shaking folks out, and I wouldn't be surprised maybe to see a little bit more shake. And so I'm thinking the next week to maybe 10 days could be a little dicey for the market. And I don't know exactly what that means, except I would be a little cautious. You know, we had the sentiment issues. If we look back at the top, and I wrote about those in a couple of different blogs, so I'm not going to go back into that again. You can go back and look at those articles. But I was nervous about the sentiment issues back then. Since then, the sentiment issues are now fine. The sentiment's not the problem, but sentiment created the selling that's now created the technical issues that we have, the gap resistance that's failing, the 20-day EMA that we're trading beneath now that we can't seem to get back through. These are now technical issues that we're dealing with. And until we begin to resolve those, I think the market stays on the little bit on the bearish side in the near term. Another chart I wanted to show you, and this is one I think I showed over at Earnings Beats yesterday when I was doing the Trading Places live show. I think as long as this IWF, IWD remains in this uptrend, we're okay. But I mentioned to the Earnings Beats folks on my show over there yesterday that, and by the way, that's a free show as well. If you normally listen to Trading Places here at StockCharts on Tuesdays and Thursday mornings, you can go to Earnings Beats and listen in on Mondays and Wednesdays, same time, 9 a.m. Eastern, usually till about 9:30 in the morning, maybe just a little past. But anyhow, look at the IWF, IWD, the finish on Wednesday. See how we broke down to a new low? It's about a 1 month low. And we did fail to hold on to that prior support. And that's telling me that the growth stocks are out of favor. And what's really surprising about this is the Fed at 2 o'clock today essentially said rates are going to stay at zero until the end of 2023. I mean, that's a bold forecast. The end of 2023, we're in 2020. So we're going to stay at this interest rate environment for the next 3 years. Essentially, they were saying, we don't believe inflation is going to be a problem. Now, of course, you know, it's just like anything else. They can change their mind. They can do whatever they want in the future. But I think they're trying to give the stock market some reassurance that they are going to remain dovish. And with interest rates staying down for the next 3 years, you would think that growth stocks would have really taken off. But they finished on the low on a relative basis to value stocks. They finished on a low, a 1 month low. And so what that tells me is that there's been so much good stuff already built into these growth stocks that they just need more of a pause. I think we're going to go down and we're going to test one or maybe both of these areas where IWF versus IWD goes a little bit lower. And as we get down further and further, I really think it could be setting up for some great trading opportunities as we head into the fourth quarter. If this keeps falling, you're going to see stocks like Apple falling, AMD falling, DocuSign falling, you know, many of the growth, the software names, the semiconductor names, you know, even some of the retailers, broadline retail, specialty retail, some of these groups that have done extremely well during the pandemic could set up really nicely going into the fourth quarter. You know, my opinion, I believe the stock market's going higher in the fourth quarter. I am really not at all concerned about that. That's just my own personal opinion, but I think the market's going to go higher. And I think over the next few years, we're going to go a lot higher. The biggest question for me is whether growth continues to lead value. I believe it will. I believe it will. And I think what the Fed said at 2 o'clock today almost confirms that. If rates stay low, companies that can grow their earnings rapidly, they're worth more. They're simply worth more. And so I would suspect that if we do get this continuing pullback in this ratio, that it's going to set up for a really nice fourth quarter run. That's just my personal feeling about it. But if there's one concern I have or one question mark, because I think in a bull market, everything's going to go higher. So the real question for me is what leads? Is it growth or is it income or is it value? You know, is it the pandemic stocks that have been leading us for the last 6 months, or is it the other stocks that didn't lead us? Are the, you know, when the virus is finally behind us, do those other stocks play a lot of catch up? That's probably the biggest question in my mind as we go forward. And I don't have the answer at this point. I think, like I said, I really believe the growth stocks are going to outperform after we get through this September period. The next week to 10 days, I'm just not sure. I wouldn't be surprised to see some more selling in the market. And if we see more selling in the market, probably these growth names are going to get hit a little bit more. All right, the last thing I want to mention in talking technically is the transportation index. And I've been, you know, talking this up quite a bit lately. Transportation on a relative basis to the S&P 500. Look at it today. The S&P finished lower. Transports were up 2/3 of 1%. They did finish well off their highs, and they do have higher prices with a lower PPO. So there is a negative divergence. So could we see some selling? Yes. But I love the fact that transports are leading the market to the upside. I think that's a very, very bullish development. And I think that's Wall Street making a statement, because you just don't, you know, transports don't lead unless economic activity is either strengthening or you expect it to strengthen. That's basically the only reason why transports would lead the market. Transports could go up. I'm talking about relative strength. Not only are they going up, but they're really beginning to pound the S&P 500, and that is a good thing for the stock market. All right, let's move on to false breakouts. I wanted to go through some charts with you and just give you an idea of some of the areas of the market that have or maybe just struggled here today or just recently. So restaurants and bars tried to make a breakout, couldn't do it, couldn't hold it. I think short term, PPO is down a little bit, even though it tried to make a breakout. That makes me a little nervous in the near term with the restaurants. Containers and packaging in the materials area. You can see here breaking out. We did pull back quite a bit, and look, looks like we tried to break out above that February high and then pulled back. We may have still broken out a little bit, but we have a slight negative divergence. This one's, you know, until we put another high in above today's high, I'd be a little nervous. If we can do that, I'm all right. But otherwise, I think you got to be a little careful with the group. Next up, specialty chemicals. Trying to make the breakout above early September, couldn't do it. Another one maybe to keep an eye on. The water index. It's not just breaking out 52-week highs. Look here, tried to get through the 20-day. 20 days below the 50. It went up, went through the 20-day, failed, came back down below. Look what happened last time. Just a couple weeks ago, it tried to do the same thing, failed. What happened? We went down, set some new lows. So these are just some of the things that make me a little nervous in the near term about the market. Now, individual stocks. Let's look at Lowe's, LOW. It was above 170, trying to take out this triple top, and it failed, came back down, closed at 166. That could be a problem. PTGX, Protagonist Therapeutics. See the false breakout up above 23, easily clearing the last couple highs, came all the way back down. I wouldn't be surprised to see another trip back down 1920. Let's see. Next up, BLFS. Look at that bearish engulfing candle. When I see that off of an uptrend, this was a great looking chart. PPO looks good, but I wouldn't be surprised to see a 20-day test. Stock's at 25.80. The 20-day is all the way down at 22.98. EXPD. This is Expeditors International of Washington. Dark cloud cover candle. Look at the negative divergence. We keep going higher and higher. PPO keeps falling. Reversing candle. I wouldn't be surprised to see a trip back down maybe to somewhere in the 85 to 87 area. CSX. Bearish engulfing candle. Pretty good volume. PPO so-so, but just pulling back, you know, maybe a couple bucks, maybe even as low as 70, 6.5, 77. Wouldn't be a shocker based on that reversal there. How about Lifeway Foods? Boy, look at that long tail. Stock got all the way up to 889, closed at 710. When you see these long tails to the top, normally we will pull back for a couple of days. I would be shocked if we didn't at least go back down to $6 on this stock. Adobe came out with great earnings. Did it matter? Well, at the open, it mattered. Opened up 505.50. That was the high of the day on the open. Closed at 476, which was just about the low of the day. Big red filled candle. We've had a bunch of these. Look at the volume down here. Accumulation distribution starting to roll over a little bit. I think we're going to go back to this 460 area and we'll see whether we hold. I think probably what's going to happen with Adobe and maybe the overall market is that we have some sort of a bullish wedge develop. So we go a little bit lower and we get into this piece of pie kind of a thing. If you connect the lows and the highs, it squeezes. That's what I would be looking for. Also in false breakouts, we could talk about some shooting stars. So how about TRUP? Look at this right here. Made the breakout above that early August high and then failed. Double top, I would expect to see some short-term selling. TTGT, another one, false breakout. Came back down, failed to get it on the close. Makes me a little nervous near term. AVEO, same thing. Look at this one. Now, PPO looks pretty good, but look at the gap resistance over here. Went above it, intraday, failed on the close. I wouldn't be surprised to see a little short-term weakness here. How about XBIT, last one? False breakout, equal highs, maybe just slightly higher high, big volume, but we came back close near the low. Look for that rising 20-day moving average. All right, moving on, earnings spotlight. Only one stock I had here that I wanted to take a look at, and that is Cantel Medical. Not a really good-looking chart, I'll be honest. I mean, medical equipment group still okay, but look at Cantel relative to its peers. It set a high, maybe a 6-month high back here in June. Last 6-7 months, that's the highest we could get. Tried to get there in August, but now we're rolling over and actually getting closer and closer to about a 3-4 month relative low. So Cantel makes me a little nervous here. Don't know that I would really be expecting anything one way or the other. I just think it's kind of middle of the road. Nothing to get excited about. All right, let's wrap this up with the 3 you must see. I'm going to start off with the airlines, just the airline index. We finished up 3.5% today. Industrials, one of the key areas I said at the top of the show, energy, financials, and industrials. Energy was up over 4%, financials and industrials both up over 1%. And this was one of the reasons why. Airlines up 3.5%. Look at them trending above the 20, which is above the 50. We had some rapid movement back in May and June, and then we came down and couldn't hold on to the moving averages. This has been more steady, and I think this may continue to hold. We'll have to see. But I think this is telling us the market's feeling a little bit better about airlines, and maybe that's because the market's seeing past the virus and into 2021. Speaking of the airlines, let's take a look at Southwest, LUV. LUV closed at its highest level since this gap down back in March. Finally closed above 42. I don't know if this is going to continue, but I would watch that rising 20-day. As long as that holds, I'd be feeling pretty good here. And then finally, Delta Airlines. Delta also trending higher. It's got a little bit more work to do to get up to that June high, but I think it's heading for that 37.50 area, and then we'll see if we can break through. All right, that is it for me. Again, head on over to earningsbeats.com. We'd love to have you. You can check out our free newsletter, or you can join our paid service. Love to have you. Everybody have a great day on Thursday. Be careful out there. Could be in for some more selling. We'll see. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.